Usage-based insurance, UBI, also known as pay-as-you-drive, PAYD, and pay-how-you-drive, PHYD, and mile-based auto insurance is a type of vehicle insurance whereby the costs are dependent upon type of vehicle used, measured against time, distance, behavior and place. This differs from traditional insurance, which attempts to differentiate and reward safe drivers, giving them lower premiums and/or a no-claims bonus. However, conventional differentiation is a reflection of history rather than present patterns of behavior. This means that it may take a long time before safer, or more reckless, patterns of driving and changes in lifestyle feed through into premiums. Concept. The simplest form of usage-based insurance bases the insurance costs simply on the number of miles driven. However, the general concept of pay-as-you-drive includes any scheme where the insurance costs may depend not just on how much you drive but how, where, and when one drives. Pay-as-you-drive, PAYD, means that the insurance premium is calculated dynamically, typically according to the amount driven. There are three types of usage-based insurance. Coverage is based on the odometer reading of the vehicle. Coverage is based on mileage aggregated from GPS data, or the number of minutes the vehicle is being used as recorded by a vehicle-independent module, transmitting data via cell phone or RF technology. Coverage is based on other data collected from the vehicle, including speed and time of day information, historic riskiness of the road, driving actions in addition to distance or time traveled. The formula can be a simple function of the number of miles driven, or can vary according to the type of driving or the identity of the driver. Once the basic scheme is in place, it is possible to add further details, such as an extra risk premium if someone drives too long without a break, uses their mobile phone while driving, or travels at an excessive speed. Telematic usage-based insurance, i.e., the latter two types, in which vehicle information is automatically transmitted to the system, provides a much more immediate feedback loop to the driver. By changing the cost of insurance dynamically with a change of risk, this means drivers have a stronger incentive to adopt safer practices. For example, if a commuter switches to public transport or to working at home, this immediately reduces the risk of rush hour accidents. With usage-based insurance, this reduction would be immediately reflected in the cost of car insurance for that month. The smartphone as measurement probe for insurance telematics has been surveyed. Another form of usage-based insurance is PHYD, pay how you drive, similar to PAYD, but also brings in additional sensors like accelerometer to monitor driving behavior. Potential benefits. Social and environmental benefits from more responsible and less unnecessary driving. Commercial benefits to the insurance company from better alignment of insurance with actual risk. Improved customer segmentation. Potential cost savings for responsible customers. Technology that powers UBI, PAYD enables other vehicle-to-infrastructure solutions including drive-through payments, emergency road assistance, etc. More choice for consumers on type of car insurance available to buy. Social benefits from accessibility to affordable insurance for young drivers, rather than paying for irresponsible peers. With this type of insurance, young drivers pay for how they drive. Higher-risk drivers pay most per use, thus have highest incentive to change driving patterns or get off the roads, leaving roads more safe. For telematic usage-based insurance, continuous tracking of vehicle location enhances both personal security and vehicle security. The GPS technology could be used to trace the vehicle whereabouts following an accident, breakdown or theft. The same GPS technology can often be used to provide other Non-insurance benefits to consumers, e.g., satellite navigation. Gamification of the data encourages good driver behavior by comparison with other drivers. Potential drawbacks. There are limits to the ability of any insurance system to predict future risk, including usage-based insurance. Some lower-risk drivers will still subsidize some higher-risk drivers, to some extent. For usage pricing, driving habits must be documented, raising privacy concerns especially in the case of systems which use continuous GPS tracking of vehicles. Personal information such as where you drive may also be inferred using only data such as speed and distance driven. Pricing plans based on behavior may be harder to compare between insurance companies, making it more difficult for consumers to price shop and reducing competition. Implementations. USA equals Metromile equals. Metromile is a usage-based insurance startup funded by New Enterprise Associates, Index Ventures, National General Insurance, AmTrust Financial, and other investors. It offers a driving app and a pay-per-mile insurance product using a device that connects to the OBD2 port of all automobiles built after 1996. Metromile does not use behavioral statistics like type of driving or time of day to price their insurance. They offer consumers a fixed base rate per month plus a per-mile rate ranging from 2 to 11 cents per mile, taking into account all traditional insurance risk factors. Drivers who drive less than the average 10,000 miles a year will tend to save. Metromile allows users to opt out of GPS tracking, never sells consumer data to third parties, and does not penalize consumers for behavioral driving habits. Metromile is currently licensed to sell auto insurance in California, New Jersey, Oregon, Pennsylvania, Washington, Virginia and Illinois. More states are expected to roll out shortly. Progressive equals. Snapshot is a car insurance program developed by Progressive Insurance in the United States. It is a voluntary, behavior-based insurance program that gives drivers a customized insurance rate based on how much, and when their car is driven. Snapshot is currently available in 46 states plus the District of Columbia. Because insurance is regulated at the state level, Snapshot is currently not available in Alaska, California, Hawaii, and North Carolina. Driving data is transmitted to the company using an onboard telematic device. The device connects to a car's onboard diagnostic OBD2 port. All automobiles built after 1996 have an OBD2 and transmits speed, time of day and number of miles the car is driven. Cars that are driven less often, in less risky ways and at less risky times of day can receive large discounts. Progressive has received patents on its methods and systems of implementing usage-based insurance, and has licensed these methods and systems to other companies. Progressive has service marks pending on the terms pay-as-you-drive and pay-how-you-drive. Allstate's usage-based insurance program, DriveWise, began in 2010, with the company launching a mobile app version in 2014. The DriveWise app rewards safe driving by analyzing speed, braking, and time of day to calculate cash rewards and/or savings on a customer's auto insurance premium. The app provides feedback on each trip taken and offers tips for safe driving. As of May 2016, DriveWise is available in 48 of 50 states plus D.C. all but CA, NC. The majority of states offer DriveWise through the app, while 7 states, AK, FL, IN, MA, NY, O, WA, currently only offer it through a car plug-in device. After downloading the DriveWise app and enabling location services, DriveWise will automatically detect trips Both Allstate and non-Allstate customers can download the DriveWise app and use it to receive safe driving tips as well as Allstate rewards points, which can be redeemed for savings on brand name merchandise through a separate website. Liberty Mutual Insurance Onboard Advisor is a commercial lines pay-how-you-drive PHYD. It offers up to 40% discount to commercial and private fleets based on how safely they actually drive. National General Insurance National General Insurance is one of the first and largest auto insurance companies to institute a pay-as-you-drive PHYD program in the United States back in 2004. The National General Insurance Low Mileage Discount is an innovative program offered to OnStar subscribers in 34 states, where those who drive less pay less on their auto insurance. This opt-in program is the first of its kind, leveraging state-of-the-art technology using OnStar to allow customers who drive fewer miles to benefit from substantial savings. Eligible active OnStar subscribers sign up to save on their premiums if they drive less than 15,000 miles annually. Subscribers who drive even less than that can save even more, up to 54%. Under the program, new National General Insurance customers receive an automatic insurance discount of approximately 26% upon enrollment. Existing OnStar customers receive a discount based on historical mileage. With the subscriber's permission, the odometer reading from his or her monthly OnStar vehicle diagnostics report is forwarded to National General Insurance. Based on those readings, the company will decrease the premium using discount tiers corresponding to miles driven. Information sent from OnStar to National General Insurance pertains solely to mileage, and no additional data is gathered or used for any purpose other than to help manage transportation costs. Customers who drive more than 15,000 miles per year are not penalized, and all OnStar customers receive an insurance discount simply for having an active OnStar subscription. Japan AIOI introduced a pay-as-you-drive insurance product in Japan in 2005. They partnered with Toyota to develop the technology. The technology is based on Toyota's G-Book terminals. Australia Real Insurance Pay-as-you-drive is the world's first trust-based product developed in Australia by Real Insurance. 10. It solves a number of the problems that especially location-based solutions face, particularly privacy issues and variable premiums. Customers pay a minimum premium, and then prepay for kilometers. QBE Insurance Box is the first telemetry-based insurance system in Australia, and uses telemetry from a device plugged into the vehicle's OBD2 port. The telemetry is used to rate driver behavior, and provide this via a drive score to the insured. Premiums are adjusted annually. MAPFRE generally offer their pay-as-you-go policies in Spain since 2007, primarily for 18 to 30 years clients. In Italy, Saro Assicurazioni was the first insurance company to launch a pay-per-use product in 2003. IRIS, the International Research and Intelligence Systems Global IRIS companies pay-as-you-drive and fleet risk management products. 1. Strategic Risk Magazine's European Risk Management Products of the Year 2008. These products are currently under evaluation by two major insurance companies. IRIS is located in Coventry, United Kingdom. Tests. A number of tests of telematic auto insurance are currently underway or recently completed. These tests are being conducted in many different countries. They include King County, Washington, United States, 5,000-person trial by Unigard Insurance with $1.9 million in federal funding. Sweden, 250,000 kilometers trial during 2013 using the smartphone as sensor by the insurer if patents. There are several issued patents and pending patent applications that have been filed worldwide on various inventions related to telematic auto insurance. These include EP070009, Individual Evaluation System for Motorcar Risk, US 5,797,134, Motor Vehicle Monitoring System for Determining a Cost of Insurance, Progressive Auto Insurance, EP2,803,046, Reporting of Meter Indication, Movelo, EP28128771A1, Determination of Activity Rate of Portable Electronic Equipment, Movelo, JP Application 2,2,259,708, Vehicular Insurance Bill Calculating System, On Vehicle Device, and Server Device, Toyota. WOA Application 2,005,083,605, Insurance Fee Calculation Device, Insurance Fee Calculation Program, Insurance Fee Calculation Method, and Insurance Fee Calculation System. AIOI Insurance Company. In order to make sure that patents did not hinder its pay-as-you-drive development program, Norwich Union purchased the UK version of EP070009 and obtained an exclusive license to any EU patents that may emerge from Progressive's EU patent applications. In June 2010, Progressive Auto Insurance filed a patent infringement lawsuit against Liberty Mutual over one of Progressive's pay-as-you-drive auto insurance patents. In September 2010, Progressive Auto Insurance filed a declaratory judgment lawsuit against Hughes Telematics to have several its patents covering OBDII-mounted wireless data loggers declared invalid. Progressive uses these devices from a competitive supplier, Xergo Technologies. Impaired driving telematics have been proposed or utilized in order to detect distracted driving. The use of telematics to detect drunk driving and texting while driving has been proposed. A U.S. patent application combining this technology with a usage-based insurance product was open for public comment on peer-to-patent. Drive less, pay less for insurance. Environmental Defense Fund. November 12, 2008. Pay-as-you-drive vehicle insurance advocacy organization. British Columbia, Canada. Insurer launches per mile cover. BBC News Report. October 5, 2006. Motorists must pay for road use. BBC News Report. December 1, 2006. Texas Driving Research Study. Big Brother in the Backseat. Electronic Design Magazine. Sept. 06. 2004. Prepaid. Privacy-friendly pay-as-you-drive by Tronco Zoe al. Workshop on Privacy in the Electronic Society 2007. Pay at the Pump. The Economist. February 23, 2013. UBI set for the mainstream. February 26, 2013.